Hi, this is Adam Hewison. I'm coming to you from the digital studios of Market Club, and the market we're looking at today is the Dow, which had a remarkable day. That's the Dow Jones Industrials. They were up over 2%, and they closed at their best levels for the year at 10,226.94. Excellent close, taking out the previous high. There's an old expression on Wall Street, you don't fight the tape, and this is a clear example of the market moving higher and looking like it wants to go higher. Now, we've drawn in our Fibonacci lines, and this is the 50% line here and also the 61.8% lines. Now, these lines are going to be important lines in our opinion, because this move from the lows in March represents a 50% retracement right here, and also a 61.8% retracement if we get the market that high. What that means is you're seeing a retracement in the confines of a potentially longer term bear market. Now, I know it's hard to believe, but the reality is this is similar to happened in 1929 when you had a recovery and then the market eventually turned back down. Now, markets tend to need to roll over. A lot of markets roll over just on their own weight. And let me give you an example of that. I'm going to take everything off the screen, and I'm going to go to scope this in, and you'll get an idea of what I'm talking about. So here's an idea where the market is actually rolling over right here, just beginning to roll over. We take out the lows here, and then eventually we just seen lower lows, lower lows, lower lows, and then of course the contra is true when you start making higher highs. It changes the trend. But it seems to me if we're going to make this market turn around and potentially come back down, it needs to do something a little more than what it's doing right now. So I think as we go on, we potentially could see this market start to arch and come back down again. It's debatable because the trend is clearly up, but something will eventually happen. There will be an extended move on the downside, more than likely sometime in the future. But for now, with new highs, the market's going higher. However, this did not translate into the other markets we follow, and that's the NASDAQ as well as the S&P 500. Here's the S&P 500. You've seen us use this many times before as examples. And you can see that we're looking at a situation where the market rolled over again, had the recovery, and we're very close to this 50% retracement. Very, very close. And the NASDAQ has already gotten there. And I think if we do not see this market taking out these highs tomorrow, we potentially could see a little more effort like this to the sideways. But I think chances are it's going to be taken out, and we may have another leg past the 50% level. As many of you know who have been watching these videos, that we were looking for this market to actually potentially form the right shoulder of a head and shoulders formation. So let me just take this out and scope this in a little bit further so you can get an idea. We were actually looking for this market to do something like this. And it may still be true. We may still see this formation, but certainly these levels here are key levels to watch. If we see the market come down below there, then this market's in trouble. But we're close to turning up here, so there's perhaps a lot of momentum still left on the upside. So let's watch this market very carefully. New highs obviously keeps the bull market alive, and that's what everyone's looking for right now. So this is Adam Hewison for Market Club. Thanks for stopping by. Every success with the market.